My name is Salahuddin and I'm the marketing manager at SP Funds. We really have an awesome lineup today to discuss ethical and Sharia-compliant ETFs. Welcome again, and thanks for being here and willingness to share with us the presentations today. As many of you know, we recently launched SPRE, a Sharia-compliant REIT ETF. It's our third, making SP truly the largest family of Sharia-compliant ETFs in North America. So today we'll spend some time to discuss Sharia portfolio and ethical investing, and I guess our funds also. Of course, we've got to always protect ourselves. This is our disclaimer, and just to let you know that this is for informational purposes only. Today's agenda is pretty simple. We have 3 presenters, and after the presentations, we'll have questions and answer. You can either use the chat to ask your question, or raise your hands, and we can always open the mic for you. The option to ask your question by audio would certainly be after our presenters would have been completed with their presentation. With that, I want to introduce CEO of SP Funds, Mr. Naushad Virji, who will speak about opportunities in the ethical and Sharia compliance space, how investors can seek to create a win-win situation for themselves and their clients. Naushad, it's all yours.
All right, thank you, Salahuddin. Good afternoon, everybody. My name is Naushad Virji. I'm the founder of SP Funds. We created these ETFs because we feel there's a very large market for both Sharia-compliant investing and ESG solutions. Advisors who are interested in reaching 24% of the world's population that currently identifies as Muslim will find our ETFs to be the ideal solution for capturing those assets. Our ETFs cover equity, fixed income, and real estate. These funds avoid sectors not compatible with Islamic values, such as tobacco, alcohol, pornography, etc. We also avoid investments focused on interest-based finance. The types of securities we have are stocks like Microsoft, Tesla, Procter & Gamble, J&J, and many others. In our global fixed income portfolio, we invest in Sukuk rather than traditional bonds. Sukuk are certificates that are asset-backed that derive income through leasing arrangements. Another very important consideration with our ETFs is the minimization of debt. We invest in securities that have debt that is 30% or less than their market cap. This makes our funds an ideal way to hedge against leverage. Our ESG rating is very impressive. The combination of socially responsible investing along with strong corporate governance in the form of responsible debt management gives us a very strong ESG ranking. Our institutional sales manager, Peter Barron, will give you a more detailed tour of our funds. One of our portfolio managers, Irfan Chaudhry, is also on the call and will be able to answer any questions you may have. Thank you for joining us today, and I hope you find this presentation productive in helping you grow your business. Thank you.
Thank you, Naushad, for that. We really appreciate the brevity there, and of course your perspective on the matter. Let's now move on to Irfan Chaudhry, who is a portfolio manager, who will focus on the growing trend of aligning lifestyle choices with investment options and strategies. So Irfan, it's all yours.
Thank you, Salahuddin. It's a pleasure to be here, and thank you for all the attendees who are there for showing the interest in this theme. Ethical investing is socially responsible investing and ESG themes. they are used, probably if you're in the financial space, you would come across these terms quite often. And these terms, ESG, is becoming more and more important as the time goes by. Ethical investing is pretty old. It's a Quakers fund was launched in the US back in 1870s. And then there are faith-based funds like there were Mennonite funds, and there were the Jewish funds as well. The Sharia-compliant, the Islamic fund started in 1960s from Legia Islamic products. So that's where it started from. Still, there is a dearth of Islamic products. There's not so much abundance of Islamic investing products out there. And there's a huge population, as Naushad indicated. One theme which is really we had been looking at, and there's a massive move of money from conventional investing to the ESG investing. And part of the reason is not only the green concerns, part of the reason is the green concerns as more of millennials come into the investing space, and there's a shift, huge shift of the wealth actually. Currently it's estimated around $50 billion. And in next 5 years, according to a recent Deutsche Bank report, it's estimated to reach around $5 trillion, so which is a massive amount of transfer. And so that's kind of, as financial advisors, that's a opportunity, bigger opportunity to capitalize on. Second part of which I briefly want to touch on is what's the overlap between the Sharia compliance and ethical investing. Sharia compliance uses negative screening, which avoids, filters out the companies with the higher debt. So ESG basically consists of environmental, social, and governance. That's what these three letters stand for. Socially harmful companies or businesses, they are filtered out and they're not included in the Sharia investing space. So then on the governance front, as we filter out higher debt and highly levered companies, generally those highly levered companies have agency problem as well. And that is used as a measure to counter that agency problem. On the social front, again, the utilities, they are highly levered, they have a higher carbon intensity. Overall, that has resulted in these ETFs we launched carrying a very high ranking on the social responsibility, on the carbon footprint, as well as on the governance side. So they were last year, end of last year, they were being ranked as 96th percentile by a third-party provider. Same is the case with SPS. This I'm talking more in the equity terms, but also in the SPUS, which are generally backed by the assets, and so they are not really tied to, as it appears from some issuing countries, maybe producers of oil. Carbon intensity is generally traditionally, as is ranked against ESG companies, does not really rank, should not rank against the SPUS products. So on the real estate front, the new ETF we launched SPRE, it has a diversified mix of assets in the timber REITs, in the digital REITs, in R&D REITs. All these three components probably comprise roughly around half of the portfolio. And if you would notice that, you know, all these three sectors, they are very, very green sectors, and highly, and generally SPRE is very new, and I expect it to be ranked very highly by the peers on the ESG spectrum as well. So there's a massive amount of transfer, and I think for financial advisors, that provides an opportunity really to think very seriously about the Sharia-compliant products we have, and use them as a futuristic lever for growing their assets and growing their business. Thank you.
Thank you, Irfan. It's always great to listen to you. You know, your knowledge and your depth in the field is quite evident. Our next speaker, of course, and the main course for today's presentation is Peter Barron. He's our institutional sales manager at SP Funds, and he'll be speaking about and giving you a walkthrough of our ETFs. So Peter's over to you. While you're being prepared, I'll share my screen so that you can get to see his presentation. Share. Peter, you there?
Yes, I am. Hello, everyone, and thank you, Saladin, for the introduction. As Saladin mentioned, my name is Peter Barron, and I'm the Institutional Sales Manager at Sharia Portfolio, and I'll be providing an overview of our ETFs for you.
Control is all yours.
Oh, okay, thank you. So at SP Funds, we currently offer 3 Sharia-compliant ETFs. We have SPUS, the S&P 500 Sharia Industry Exclusions ETF, which is a US equity ETF investing in the Sharia-compliant constituents of the S&P 500. Next, we have SPSK, the Dow Jones Global Sukuk ETF, which is the world's first Sharia-compliant fixed income ETF. And lastly, we have our recently launched S&P Global REIT Sharia ETF, which provides value exposure to real estate and tracks the Global Sharia All REIT Capped Index. I apologize, there we go. This was a great honor for us. We have our CEO, Naushad Virji, opening the New York Stock Exchange, celebrating the launch of our first 2 ETFs, SPSK and SPUS. So now, for those who are not familiar with Sharia-compliant investing, it excludes companies that are involved in the following. Now, Naushad did mention a few at the beginning, and it includes alcohol, tobacco, and pork, as well as gambling, adult entertainment, highly leveraged businesses, interest-based businesses such as banks and investment companies, music, cinema, or broadcasting, weapons in the defense industry, and lastly, credit cards. To remain Sharia-compliant, no more than 5% of a company's revenue can come from these forbidden sectors. Now, I apologize for the delay on some of these slides changing. So I'll begin with SPUS, which is the S&P 500 Sharia Industry Exclusions ETF. This ETF launched in December of 2019 and currently has 47.9 million in assets. Now, SPUS helps clients gain value-conscious exposure that follows AOFI-compliant guidelines, which is considered the gold standard in the industry. It tracks the S&P 500 Sharia Industry Exclusions Index and consists of approximately 200 stocks from the S&P 500. No, I apologize. It has an MSCI ESG score of AA and ranks in the top quartile globally amongst all funds and top 15% among its peers. Lastly, it has a management fee of 0.49%. Now, as you can see on this chart, SPUS is up over 29% since inception, and it's outperformed the S&P 500 by over 9% in that time period. Now, these performance numbers outline the ETF in different time periods over the last year against both its index as well as the S&P 500. Now on this chart, you'll see the top 10 holdings, which consists of mega cap multinational corporations like Microsoft, Tesla, and Apple that you're familiar with, as well as the sector weightings of the ETF. The larger exposure to technology and healthcare, among others, as well as lower exposure to sectors that did not perform as well, has helped lead to SPUS's outperformance of the S&P 500. So now next we have SPSK, the SP Funds Dow Jones Global Sukuk ETF. It also launched in December of 2019 and currently has 32.1 million in assets. Now its portfolio consists of Sukuk. Sukuk's a financial certificate similar to a bond that's Sharia compliant. It's asset backed and does not pay interest. The portfolio currently consists of 60% government and 40% corporate Sukuk, and all are investment grade. Currently, the portfolio is approximately 2/3 A or above. Now, this ETF also follows AOFI guidelines and it tracks the Dow Jones Sukuk Total Return Index. It offers potential diversification benefits for your clients, not just to the Sharia investors, but other fixed income investors as well. And it may offer decreased exposure to duration as well as interest rate risk. So SPSK has a current net yield of 2.54% and a management fee of 0.65%. Now, this chart outlines the performance since inception. The ETF did over 4% last year in total return. And during the market pullback in March and April, where you had losses of over 30% in the equity markets, SPSK was down approximately 5%. So providing your clients with downside protection during that turbulent time. Now here, this slide highlights the performance numbers broken down over the different time periods against the index. Now you'll see in 2020, the index did about 7.9% return, whereas SPSK did 4.09%. So just to clarify in terms of the lag in performance there, over the longer time periods, you'll see it because it was deploying capital, as Sukuk typically doesn't have great liquidity as well as high buy-ins. So it took a little longer to deploy the portfolio into the Sukuk. This has largely been addressed by May, and the performance differences have narrowed significantly since, and have in fact been outperforming of late the index as well. Now here we have the top holdings as well as the geographic distribution for SPSK. Now, you'll see the top holdings, a lot of them are in Saudi Arabia. But as you can see, looking at the geographic distribution, it's a well-balanced portfolio, not just within the Middle East, but with Sukuk from other regions, including supranationals, Asia, and the US. And one thing I'd like to mention is that though there's Sukuk holdings in the Middle East, even with oil's dive in the spring, there was little impact on the portfolio as the assets backing the Sukuk are well diversified. So lastly, we have our recently launched SPRE, the SP Funds S&P Global REIT Sharia ETF. We just launched this on December 30th, 2020, and we've already raised over 5.1 million in assets, and it continues to grow. SPRE provides value exposure to real estate through Sharia-compliant REITs, which meet screening requirements. It tracks the S&P Global Sharia All REIT Capped Index, which contains all Sharia-compliant REITs from the S&P Global REIT Index. Now, this ETF helps provide further diversification in a Sharia portfolio through global exposure across the real estate subsectors, including, but not limited to, residential, timber, communications, infrastructure, and industrial. It offers a strong potential for income and price returns, capital preservation, as well as hedging against inflation. Since launch, SPRE is up 3% in less than a month. The portfolio currently has an annual yield of 4%, and the management fee is 0.69%. Now here again, we have the top holdings in SPRE, as well as the geographic distribution. So you'll see it's largely in US domiciled REITs. A lot of these are multinational, so you're getting exposure right across the world, and also diversification through the holdings as well in Europe, Asia, Australia, and New Zealand. So yeah, thank you everyone for your time, and just want to say, feel free to contact me if you want to further discuss the largely untapped opportunity with investors that are looking for Sharia compliant solutions, as well as how these ETFs can benefit all of your clients' portfolios and not just within the Muslim community. So thank you very much for your time, and I'll now hand it back over to Saladin.
Hey, thanks, Peter. That was definitely great learning about these ETFs, and I'm quite sure our audience would have seen that, you know, the diversity and the opportunity it brings to you and of course your clients. With that, the floor is open. If there's any questions, please just raise your hands, and I'll open the mic to you. If not, you can, you know, chat your questions and we'll get to them. I haven't seen any question chatted, so I assume everyone wants to ask their question. So the mic is open if you would like to. Was there anything else you wanted to add, Naushad, if I can ask you? I know we talked about the ETFs and we talked about ESG. Can you elaborate a bit more for the advisors who are on the call on the potentials and where the market is going over the next decade or so?
Yeah, I'd be happy to comment. One of the big challenges in Sharia compliant investing has been that outside of stocks, there really haven't been other solutions available. We've consulted a lot of multi-billion-dollar firms on this topic on how to address these issues. you know, a lot of people feel that, okay, if I have somebody from the Muslim community or sovereign wealth fund from the Middle East or something like that, they can create a Sharia compliant portfolio using stocks that are, many of which are obviously Sharia compliant, and they'll focus on those. But then what happens when you're in an environment where there's more volatility, or if the markets are at an all-time high and clients are now concerned about downside risk? How do you balance that? How do you hedge against market risk? So the products that we've introduced, particularly the Sukuk ETF, it's the first of its kind in the world. And it allows anyone who wants to not just hedge against market risk, but also try and avoid interest rate risk. You know, the Sukuk is a phenomenal product for that. And it's something that, you know, it has been an award-winning ETF. When we launched it, we won an award for best global fixed income fund. And I think it's going to be a fund that's going to be a critical component in not just Sharia compliant portfolios, but even portfolios that are looking for some alternative where they can still achieve some type of stability without being subjected to as much interest rate risk. And with a dividend yield, current rate yield of about 2.5%, I think the Sukuk is a very viable option.
Yeah, there was a related question, Naushad, on the Sukuk from one of our attendees, Saeed. He's asking, can you explain how Sukuk reduces interest rate risk?
Sukuk is different from bonds in that instead of being focused on credit quality, it's asset backed. So one of the popular examples of how this works is, say, an airline like Emirates Airlines. When they were building up their fleet after they had launched their airline, how do you get the capital to buy all the airplanes that you need? So the easiest way was to use Sukuks. So instead of borrowing money at some interest rate, they're instead having the Sukuk fund buy those airplanes for them and lease it back. So it's like a lease with an option to buy. And that's a transaction that's separate from interest. It doesn't involve any interest. And over time, the airlines can buy out those airplanes. The Sukuk itself is backed by the asset itself. So there isn't as much concern about credit quality. And I think that's what makes it as interesting of a product as it is. It's truly different. There's not been anything like this in the North American market. And the ETF wrapper gives the flexibility for anyone to be able to get in and out very easily and to use it even as an alternative to money markets and cash holdings.
Great. And I think, Peter, this question might be for you or Irfan. What is the current expected yield on the SPSK?
Well, I'll just say, so the current net yield's at 2.54%. And Irfan, did you want to add anything in regards to projected yield or target yield?
So I think that was the initial thought to make this product on the distribution side a viable and a strong product for the income portfolios. So 2.54, that was by design. And I think we are starting this year. Obviously, the yield is dependent on the price gains as well. But that's what we look at, that 2.5 level net is kind of like what I think. And also adding to what Naushad was saying, on the Sukuk front, if we see the performance of the Sukuks and the other treasuries in the last 1 year, you would notice the impact of the drop in the interest rate on the treasuries, which have done well actually in the last year. So interest rates almost zero globally, and in some cases as well below zero. So there is no way the interest rates kind of whatsoever Fed says. We have seen the interest rate rising since the last couple of months, and it has 10 years rate has US 10 years rate has increased almost like 85 bips to 90 bips, and which is 0.9%. that affects the general fixed income products adversely. But as we have not benefited, the Sukuks have not benefited that much from the drop in the rates, so we are not going to get hurt from the rise in the interest rates as well. That gives us the safety in that rising rate environment. We see that rates are going to go up. There's no way the rates cannot go down from here. The only way is to up. And SPSK is a great product in the time of rising rate environment, even as a diversifier in a regular conventional fixed income portfolio.
Great, great. Yeah, I think we're getting some really, really great questions, and all these questions are great. I think this one, is very meaningful for those who are listening. And he's asking, what is a recommended allocation between the three the three ETFs for a possible aggressive or conservative portfolio?
Naushad, do you want to?
Yeah, I can take that question. I think that there's a lot of ways to do this. I had actually written an article about that topic, which I believe was published by IFN. And I'm happy to share that article. I think it's on our website as well. But anyhow, one of the ways to do this, for an aggressive portfolio, and obviously you have to consider the current situation right now with the markets as high as they are. It's not a bad idea to maybe pull back a little bit on the equity side. So if you still want to be aggressive, one of the obvious choices may be to go 80% SPUS, so that's 80% in stocks, and then 10% in Sukuk and 10% in real estate. Obviously, you can vary that based on how your client feels or what your thoughts are on the near term. To be more conservative, then you would want to probably focus a lot more on the Sukuk and the real estate, maybe do 30% each on those two ETFs with the balance in SPUS. But again, there's a lot of different ways to do this, and there's a lot of different considerations. But those would be what I would recommend in today's market.
Mm-hmm. And this might be a question for you also, Naushad, and maybe Irfan, and Peter too. I know we are very, very active in Canada with our other divisions, and we've been growing quite rapidly in the Canadian market. So this question actually is about the Canadians. Any plans to make TSX listed ETFs for Canadians? I guess this person is Canadian. He mentioned us Canadians. How does SPUS compare to HLAL in holdings and process?
We are very interested in doing something in Canada. We're still exploring some ideas and looking at a lot of different ways to do this. So it's definitely something that's on our radar, but we don't have anything yet to launch in the next few months or near term. But it is definitely something that we're interested in. In terms of the second question, how do you compare SPUS to HLAL? Obviously, they're very different indexes, and our focus was really to work with S&P and to have an S&P product. For many, many years, in fact, when I think it was over 2 decades ago that I got into this business, and since the beginning, I've heard a lot of gripes about why can't we have an S&P 500 that's just Sharia compliant. And it's something that's been requested for a very long time. And I'm really pleased that we're able to put that together and offer that in the form of this ETF. This is an S&P 500 ETF that effectively just strips out everything that's not Sharia compliant in the S&P 500. So it's different from HLAL, which has a much higher concentration of certain stocks like Apple, for example. I feel SPUS, is diversified a little bit better per the S&P 500. Irfan, did you want to add anything to that? You're on mute.
Sorry. Yeah, no, that's a great explanation. Both these ETFs, their process is full replication, and which essentially means they replicate the index. The HLAL follows FTSE, and there's a different constitution for FTSE. We have worked very closely with S&P, and we are S&P's preferred partners in Sharia space. And we have worked very closely with them to create this index for launching this ETF, which is a IOFI compliant. On the broader, like what's the outcome of that is like, obviously it's something which Naushad indicated as well, but a different sector weights. We have within, even we have a stronger weight in the tech sector, but within tech sector also there is a disaggregation of the different subsectors like Internet of the Things, like semiconductor manufacturers, and the large caps. So essentially a slightly different composition of that and that's a part of that is reflected in how SPUS performed during the market downturn, and then how it recovered very well after in the recovery phase. It had a much higher up capture and much lower down capture compared to HLAL.
Yeah, great. Anything you want to add, Peter, on that?
No, I think Naushad and Irfan covered that quite well.
Great. Well, this one might be for you then. Right now, do we expect commercial real estate to grow given work from home expected to continue and the demand for office space to remain low? So the question is, with everyone working from home, how do we expect, SPRE and other real estate funds to perform?
If you don't mind, let me take that question. I think that there's a couple of ways to look at this. Definitely there's going to be an impact because of COVID. We've actually been avoiding commercial real estate for a while. We also run a private real estate fund that's been very successful, and we've been focused primarily on residential and very little on commercial. And the fund has done really well. We do believe that the real estate market is, especially commercial, is taking a hit. And I think this year that may actually mean that we may be able to pick up some assets in that space at a pretty good discount. So it might actually be very advantageous. And that's also one of the reasons why we launched the new REIT late in the year, right towards the end of the year, so that we can take advantage of the opportunities of buying low. Now, our fund is not just in commercial, but that commercial component that we have, I feel will be able to pick up some of that type of real estate at much better pricing. The other thing to consider also is, just like with stocks, like we've mentioned earlier with SPUS, being invested in the market in companies that have less debt, we feel that's a very good strategy because you're effectively invested in stronger companies. And that's why on a long-term basis, a lot of Sharia-compliant indexes do pretty well compared to the regular traditional market indexes. And I think the same may be true in real estate. So that's another very important consideration, where our REIT is using very little leverage compared to what you normally find in REITs. And I think that just means we'll stronger investments.
Great.
Just to kind of like, we have in our REIT ETF, an implication of that with Naushad touched on, we have timber REITs there, we have R&D REITs, we have digital infrastructure REITs, we have industrial REITs. Commercial residential is only one part of the portfolio, and it's not a major component of the portfolio. So any risk, if someone perceives a risk emanating from that portion to the portfolio, that's very minimal. When we're structuring this index, we looked at that and we were conscious of that fact. And also, when we launched this product, a lot of the REITs were trading below, commercial residential REITs were trading below their net asset values, which make it a very opportunistic product, basically. Besides, obviously, as we go along, we see that inflation is almost like the TIPS break-even rate is around 2% inflation. So the real estate is the one which is the real asset, and I think going forward, there's some benefit from that.
Yeah, great. Well, thanks. We've got a few more questions, if you guys are up to it. This one, I think, could be for you, Irfan. It says, can you Can you speak about the liquidity and volumes on the ETFs?
That's a great question, actually, and we have come across these questions all across last year when we started these products. There are two kinds of liquidities. One is a primary market liquidity, which is the liquidity how much you purchase in a certain assets before the price it starts affecting the price of the asset. That's one aspect, and second subcomponent there is a bid and ask spreads. Answer to the first part is the primary liquidity is that the primary liquidity, implied liquidity that's called for SPUS is around $240 million. That's like, because generally that's the value, that's the trade which will affect the price of the underlying assets and hence the net asset value of the ETF. So there is no concern there that a trade will affect the net asset value of the funds disproportionately. Second is obviously a part of this is the bid and ask spreads. Generally, we work with very strong partners, market makers. Goldman Sachs is our partner in that space, and they very actively manage the spreads. Whenever there's in the beginning of the funds, obviously when the fund's AUM is lower, we have received that certain days, maybe that liquidity in the secondary market in the New York Stock Exchange may be lower, and that may result in a spreads between bid and ask slightly wider. But that has been very actively monitored and very actively countered. And if there's an issue, an investor can reach directly to us, and we probably, if there's a bigger order, we can request the market maker to take the other side of the trade. So that's kind of like how I address it, but also the second component is how it has improved over the time. In the beginning of yes, but now I think these are the funds, SP funds in the last progressively they have increased the liquidity in the secondary market. Right now, each of these funds are trading more than any other Sharia-compliant ETFs, which I follow. I look at the number of shares traded every day.
Great. We've got another one here that's related to sukuks. And Said again is asking, do sukuk charge a higher leasing profit if LIBOR goes up?
There are certain sukuks which are linked to LIBOR. They are not directly on the LIBOR, but they may use LIBOR as a reference point, certain sukuks. But that's implied, that's not direct because it's a non-riba product directly. But the profits of the sukuks can be linked to LIBOR, and certain sukuks are linked to LIBOR. But as far as the dividends for SPSK, that will not be affected by the rising LIBOR.
Great, great. And I think we've got a few more here. I'll just run through them, and you guys can, take your pick which one of you would like to answer them. But any plans for ex-US equity ETFs?
Naushad.
That's another one that we've been looking at. There's obviously a lot of different funds that we're considering. The space for Sharia-compliant ETFs is still so new, and there's such a huge demand. 24% of the world's population, that's 1.8 billion people. So it's going to take us a little time to really be able to have, all the different products we'd like to have. So we've been prioritizing, and we've gotten a lot of the major ones out now with the 3 that we've already launched. But we're definitely looking at other options, and make sure you're on our mailing list, and you'll find out as soon as we have some new ones coming out. Our intention is to continually explore and launch new funds over the years. So stay tuned.
Yes, yeah. Yes, I think that's it. Do you guys have anything else to add? Are there any other questions? There are a few other questions, but I think some of them were answered already in the answers that were provided. Did you guys have any closing statements before I wrap up? Naushad, Irfan, Peter?
Yeah, I would like to say that, this is such an incredibly exciting space. One of the things that we're finding is, in the wealth management businesses that are focused on the Muslim community or the Sharia compliance space, the demand has really been incredible. There has been a lot of pent-up demand from the US and Canada and even globally. SP Global Wealth launched back in November, and the inquiries coming in have just been incredible. And the demand is out there. So the question is, which advisors are going to step up and meet that demand? And our job at SP Funds is to make that job a little bit easier for you, for advisors who want to serve this niche market. We're going to make that job much easier by giving you a fantastic core for your core satellite approach. Or if you're just using fund strategies, we've got all the funds that you need to service those type of clientele. And any help that we can provide as far as Sharia compliance or deeper dives into how this works, we're more than happy to have one-on-one conversations. If interested, and just want to take a minute to thank everyone again for joining us on this call, and invite everyone to reach out to any of us, Peter, Irfan, or myself. We'll be happy to help or answer any other questions that you might have.
Any final thoughts, Irfan or Peter?
No, thank you. I think Naushad summed it up very well. And I think just adding to that on the ESG front, because what I see is a major opportunity in next coming 5 years, where a massive amount of money is moving into ESG products. And these are the products which are really superior in the performance compared to most of the other ESG products, which I've compared it to other ESG ETFs, which are structured as ESG ETFs. So even for the conventional portfolios, I think this is a great opportunity for advisors. $5 trillion moving into this space in next 5 years, and they can benefit from these products as ESG products for the regular portfolios as well, plus the Sharia compliant space opportunity, which is a massive opportunity in its own self.
Peter, any final thoughts?
No, I mean, Naushad touched on it. Anyone that wants to go more in depth, as he mentioned, such a large on-tap market. I've been involved myself with Sharia-compliant investing for about 3 years, and the opportunity is just endless. And so anyone that wants to go more in depth, give me a call, send me an email, and we can definitely arrange a one-on-one meeting to go more into the products and see how it can help grow your client base.
Great, good. Well, again, thank you guys, Naushad, Irfan, and Peter for the presentation today. And of course, thanks to everyone who took time out to attend this webinar. It is recorded and will be shared with you and will be on our website. So feel free to take a look at it again, and more importantly, share it with your friends and family. We'll be sending you it by email, and you can grab the link from there. If you have any information, all that was mentioned today and more is available on our website, sp-funds.com. So if you go to sp-funds.com, you can get very, very updated and relevant information on these funds, the ETFs, and of course about SP Funds. With that, again, I want to say thank you very much for spending this last 45 minutes or so with us. We really appreciate it, and we look forward to hearing from you and working with you to explore the opportunities that this market and these products bring. Thank you. Bye.
All right. Thank you.
Thank you, everyone.
Thank you, everyone.